Our stock markets are down as President Trump's long-threatened tariffs against Canada and Mexico come into force. The White House says the two countries are not doing enough to tackle migration and drug trafficking. Imports from Canada and Mexico, America's biggest trading partners, will now be taxed at 25% or 10% for Canadian energy products. Trump is also adding new tariffs on imports from China, bringing them up to 20%.
These factories in Mexico produce for the U.S. market, making things like electronic key fobs for car makers across the border. A booming industry shaped by more than 3 decades of free trade. Manufacturers in Mexico have become a part of the supply chain for many U.S. companies. Because of this, some believe the trade ties they've built are strong enough to withstand Trump's tariffs.
The truth is that trade between Canada, the United States, and Mexico is very significant. This relationship has been established for years and cannot be changed overnight. It will be modified, it may be reduced, but there is no possibility of eliminating it.
Trump announced the 25% levies at the beginning of February, and then paused them after both countries agreed to meet his demands to secure the border and combat drug trafficking. Canada and Mexico were quick to act, extraditing drug lords, reducing the number of migrants, and extending the wall along Mexico's border. But Trump said it still wasn't enough. Trump has also turned up the pressure on Beijing. Last week, he threatened an additional 10% tariff on top of the existing 10% recently imposed on all goods coming in from China.
All right, let's get more from Lars Halter, who joins me now from DW Business. Welcome, Lars. So let's start with the fact that, of course, many US companies have factories in Canada, in Mexico, in China as well. I mean, how is this, first of all, going to impact American business and its economy?
Well, it's highly disruptive to them because it makes things more expensive, of course, on all sides and for all partners in that trade game. And if we just want to make it more concrete and look at a couple of companies there, American companies in Mexico, that is, of course, some car companies, General Motors is there, Ford is there, but also Intel as a chip maker is there. These are companies that at some point left the United States, partially moved into Mexico, not only because it was cheaper, but because also they had staffing problems in the US, low unemployment. So it was really hard to get the workforce there. So they branched out, outsourcing generally, of course, for decades, a very normal thing. But of course, it comes back to hurt them right now. And for these American, let's say, car makers, it really means if they're making cars as American companies on the other side of the border, just bringing them back into the US, they're going to have an added cost now of 25%. And that, of course, is crucial. But it's exactly what President Trump wants. When I think back to that one particular meeting he had at John Deere, that agricultural machine maker, during the campaign, when he directly threatened John Deere and said, if you move production to Mexico, I'm going to hit you with a tariff for everything you bring back.
So companies are being hit hard. What about people? Because, I mean, essentially, aren't consumers footing the bill here?
Yes, of course, consumers are. And now that goes back more maybe from Mexico to China as a good example here, because China, of course, makes a lot of computers and high-tech machines and parts that are bought by American companies, but they also make a lot of consumer goods, that is toys and furniture or apparel, and that all gets more expensive, and that is the crux here. President Trump, during his campaign, has proven over and over that he doesn't seem to understand the concept of how tariffs work. He basically said, and he presented it that way, that China will pay the US government for selling goods in the country. And that is, of course, complete nonsense. China is selling these products, let's say these T-shirts or toys or furniture, to American customers, but they just have to pay an extra 10 or now 20% on top. So consumers are the ones that are directly hit. And it's especially ironic because the high cost of living, talk about the cost of eggs, but it's basically the high cost of everything was a main reason American voters were angry enough to elect President Trump.
All right, let's talk about the response. I mean, tariffs always get a response. What have we seen so far from...
Yes, of course. We're seeing counter tariffs right away. Canada has already announced that they're going to hit U.S. exports now with 25% counter tariffs, as is obviously appropriate. But Justin Trudeau wants to go one step further. He said that he is considering measures outside of just more tariffs, and that could mean even stopping the import of American oil and gas and stuff like that altogether. So that would be pretty drastic measures. But of course, other countries signaling clearly to Trump that they're not kidding around with this either.
Right. Let's talk about the impact on the global economy, because what you're saying here, these are big tariffs and the responses are major. These will have a ripple effect.
Of course, it is disruptive to world trade. Even though we are now talking about 3 or 4 countries, this is a large part of global trade happening between these countries, especially between the US and China. Of course, we're talking about a $1 trillion trade here. We're talking about further threats that Trump has raised against the European Union. He wants to put tariffs on EU goods as well. But interestingly enough, EU companies, German companies, for example, already feel the pinch right now because, of course, they're also producing in Canada or in Mexico. So they're already involved. So this is going into an all-out trade war. And actually, it's interesting. I just read a quote this morning. Warren Buffett, one of the richest men in the world, an American, he calls this an act of war by Trump.
On that note, we are going to have to leave it. Lars Halter from DW Business. Lars, thank you.